This is a video report analysis of Rollins, Inc. as a part of Burken Road Reports on behalf of the A.B. Freeman School of Business at Tulane University. Analysts are Jacqueline Jing, Abigail Mallon, Jason Rosenblum, and myself, Jacob Berkelhammer. Our analyst team gave Rollins a rating of market perform with a 12-month target price of $33. First, we will give a company overview. Then we will walk you through the main factors affecting the company's future financial performance. Next, we will describe our valuation methods and the 12-month target stock price we've arrived at using a combination of three models. Lastly, our risk analysis addresses the biggest threats Rollins faces in years to come. Rollins, Inc. is an Atlanta, Georgia-based company. The company trades on the New York Stock Exchange under the ticker symbol ROL. It is one of the world's largest pest control companies, serving residential and commercial customers through its wholly owned subsidiaries from more than 500 locations worldwide. At the time this report was published, the stock price was $32.92. Rollins has 145.53 million shares outstanding and a market capitalization of $4.39 billion, making it a mid-cap company. Currently, the company is highly liquid. It holds no long-term debt and an excess of about $114 million of cash on the balance sheet. Additionally, executive management holds a majority stake in the company's outstanding equity shares. In July 2012, the company announced a stock repurchase plan of 5 million shares with no expiration date. As of the time of this report, the company has repurchased about 20% of the total target amount. Rollins uses franchises and acquisitions to grow the company. The pest control industry is characterized by many small local enterprises. However, strict regulations and geographic dispersion prevents these companies from becoming key players in the industry. Therefore, once a local company has grown to a substantial size, Rollins will consider franchising or acquiring the smaller company. If Rollins is familiar with the culture, language, and customs of the new territory, it will acquire the company. If Rollins is not, it will franchise the location. Most recently, Rollins has expanded into Australia with the acquisitions of Statewide Pest Control and All Pest. These are some of Rollins' larger wholly owned subsidiaries. Rollins can outperform small local companies with its nationally recognized brand, Orkin. The brand has a reputation for being timely, organized, and thorough. The Orkin Man image has been employed for over 60 years and maintains 70% brand recognition. This pie chart shows the different services provided by the company. Termites comprise the largest portion of Rollins' revenues. To forecast the future operating activities of the company, we used a variety of factors. Our regression model used historical information from the Case-Shiller Index for Housing, Disposable Income Index, Food Service Retail Revenues, Seasonality Revenues of Rollins, and a sum of PP&E, goodwill, and intangibles. The housing industry, food service retail revenues, and disposable income index have all been increasing within the past 5 years, helping to grow revenues. The pest control industry is highly affected by seasonality because pest populations fluctuate with changes in climate. Property, plant, and equipment, goodwill, and intangibles were all used to measure internal growth. Because the timing and size of acquisitions is unpredictable, we have not accounted for acquisitions in our forecast. For other routine business practices, we have not assumed any significant changes. We examined historical numbers to forecast future financing and investing activities. Rollins pays out consistent quarterly dividends. As a result of excess cash on the balance sheet, the company has recently been paying special dividends in the past few years. Other factors affecting financing and investing activities are the share repurchase plan and the maintenance of property, plant, and equipment. As of now, the company has completed 20% of the current share repurchasing plan. We held maintenance of property, plant, and equipment as a constant percentage of revenues going forward. For our valuations, we use two ratio methods and a dividend discount model. To start, we use the price-to-earnings ratio to see how long the company would have to continue operating, ceteris paribus, until the investor would be repaid the stock price in full. Rollins has a very large and increasing PE ratio of 35 when compared to peers in this industry. Secondly, we use enterprise value to EBITDA ratio because it represents the company's fair market value. Rollins' enterprise to EBITDA ratio increased steadily over the past years, indicating that the company has been increasing in value. Lastly, we use the dividend discount model to show the total value received by the investor from future dividends. Rollins pays out large dividends, which explains why the dividend discount model gives a higher price than the first two methods. The three bars on this graph represent each of our valuation target prices. Because our 12-month target price is very close to the current price, the single thick line represents both. Here you can see that the ratio methods have resulted in prices beneath the 12-month target, and the dividend discount model has resulted in a price above the 12-month target. We have evenly weighted all of these projections because all three methods are equally reasonable. This resulted in our 12-month target price of $33 and a market perform rating. Next, we will tell you about our risk analysis, including operational risk, regulatory risk, and financial risk. Revenues of the pest control industry fluctuate depending on season or climate because pests flourish in warmer temperatures. This results in higher revenue levels in the second and third quarters and in geographic areas where temperatures are warmest. If the natural climate patterns are offset by colder weather or other natural disasters, Rollins faces a potential decrease in revenues. Competitors and substitutes threaten Rollins' success, but Rollins maintains a competitive edge with its Orkin brand. Because of the high impact of pesticides and chemicals that Rollins uses, the risk of litigation from past customers as well as employees is relevant. However, no current pending claims or proceedings are predicted to be material. Rollins derives 40% of its income from residential customers. Therefore, the housing market has a profound effect on the success and growth of companies in this industry. If the housing market declines, the pest control companies will lose a major portion of revenues. Rollins is subject to many laws and regulations. As such, pest control companies are subject to significant financial losses if they violate regulations. The Federal Insecticide, Fungicide, and Rodenticide Act gives state governments and the EPA power to monitor pesticide use and enforce industry rules. In the future, the movement towards environmental consciousness should create stricter rules and regulations. However, Rollins will likely experience little to no financial loss in the near term as it has the resources and abilities to adapt to future changes. Pest control companies generally do not have high investment risk. However, the company faces a risk that the acquired subsidiaries will not generate the desired returns, especially since the company invests on an international scale, where information and control may be limited. Therefore, investment risks for Rollins are substantial. Rollins operates hundreds of international locations that make up 8% of total revenue. Revenues and expenses are translated using the weighted average exchange rates for the year. Additionally, the company looks to continue international expansion, raising the need for hedging as fluctuations in currencies may become more problematic. Thank you for listening. The Burke & Road reports are produced solely as part of an educational program of Tulane University's A.B. Freeman School of Business. The reports are not investment advice, and investors should not regard this presentation as recommendation to sell or buy any securities mentioned. Investors should consult an investment professional and/or conduct their own primary analysis before making any investment decisions.